G'day everyone, welcome back to Pete's Investing. Today is May 27, 2023. This is the US crude oil price update. As you can see here on our weekly, we're still in a bearish momentum with our indicators, but on the daily we've broken up into a neutral. And here we've actually hit our little target area for a slight retracement, which we predicted with using the divergence, and I'll cover each of these. First off, on the weekly, we look at the triple moving average of the price chart, moving average 3, 5 and 60. And when that marries or aligns with the CCI 150 moving average 5 and 50, then we give it this indicator down here. So they're both aligned in a short movement, as you can see there. And it's been that way for some time. Back here, there were long indicators with sporadic neutral positions throughout the whole period. So that's our weekly trend chart. On the daily, as well as that indicator, it's showing a neutral. We've also got these support resistance lines. Now this looks a bit messy, but I'm going to keep these diagonal lines in there for the time being, because generally the price will gravitate back to one of these on a decline or an advance. But you can see here in this range between this support at 64.36 and this resistance at 83.40 is now hovering around the 50% Fibonacci retracement level on that area. So that's the daily. And on the hourly, again, remember we're trading this lower time frames, such as the hourly, based on the weekly and daily trends, primarily if they're both aligned. But on the hourly, you can see here we did draw this divergence initially, this bullish divergence on the CCI versus a bearish divergence on the price chart. And we did put a target area here with this little rectangle between a 50 and a 61% retracement. And once it broke above that area, then we put a target in there, and it hit that little area there more recently in the last few hours. So that's our first target hit. But if I put a extension of the CCI to where the CCI is currently moving, you can see there it's still a bullish momentum versus the price chart. If I draw a between that same range, you can see there it's still a bearish divergence on the price chart versus a bullish divergence on the CCI. So we may see some further upside to this, and the way you would execute that is looking at when it breaks above this. If this continues trending up, or the CCI continues to trend up, and the price breaks above this trend line, say somewhere in this area, then we're looking at another target area. So I want to move that to that area there between the 61 to the 78% level. So it'll be somewhere in that range there, and I'll bring that down to the 61%. So that'll be a new target area. So I'll keep that in there for the moment. But again, as I always say, that's a small retracement. It doesn't mean it's going to be a long-term reversal. What I prefer to do is I'll look at that as potentially, if you are going short, then maybe take some profits if it starts breaking to the upside. What we primarily look at is the lower time frames trending predominantly in the direction of the daily and the weekly trend. So back here, for example, you would have gone short based on the daily, and that aligns with the weekly. You would have avoided going short during that period, even though the weekly might have stated so. So again, I prefer to trade when the weekly and the daily are aligned. So to understand this and other trading ideas, subscribe to our Patreon page to improve your trading strategy and education. We also provide weekly scans of stocks, currencies and commodities, primed for potential buy positions based on technicals. And for Patreon members, we also answer questions or take requests for technical analysis of any instruments. Subscribe, like and share this video. Thanks for watching, and see you in the next update.